Hello, it is a real pleasure to virtually join you again today at this annual event. My name is Robert Besseling. I am the CEO of Pangea Risk, a specialist intelligence company providing analysis and forecasts on political, economic and security risk in Africa and the Middle East. Since I joined you last time, a lot has happened in Africa, from elections, wars and military coups to a nascent economic recovery in some countries, as well as a gradual vaccine rollout, the start of the continent's free trade agreement, and an extension of limited debt relief for some of the continent's hardest hit countries. So we have a lot to talk about in this session, and I thank you for joining me. The theme of my presentation today is Africa emerging from the pandemic, and to provide a high-level macroeconomic overview of the continent, as well as a geopolitical risk outlook as Africa emerges from the pandemic. Well, unfortunately, I need to start out by dispelling one myth, and thus undermining the premise of this presentation theme. Africa will not emerge from the pandemic in 2021. This scenario is pushed to at least next year, and is almost completely outside of Africa's control. In terms of the current state of the pandemic, Africa's 54 countries are cumulatively approaching 4.5 million infections. This equates to approximately the same number of COVID-19 cases as the United Kingdom, although Africa's death rate has been half that of the UK and many other Western countries so far. The trajectory of the virus in Africa does look quite different than in the UK. On these daily data charts, you can see that the continent has experienced two waves of infections. The first wave in July and August last year, and the second wave at the start of this year. Rather than sloping downward or receding, the daily data shows that the virus is again in some form of holding pattern before it finds a new opportunity to trigger the next wave. While daily new case numbers have been steadily dropping across the continent, the World Health Organization reports an upward trend in 15 countries, including Cameroon, Ethiopia, Kenya, Rwanda, Tunisia and Guinea. The main concern right now is that Africa's death rate is also rising, dispelling any initial optimism over the continent's statistically lower number of deaths. The average 2.7% case fatality in Africa is now higher than the global average of 2.2%. So, where will the next wave hit Africa, and what will it look like? South Africa awaits a third wave this coming winter season, while insurers in the country are anticipating at least 2.5 more waves of infections before the virus recedes. Most recorded infections remain in the south and north of the country, while there are two secondary hubs in the dense population centers in the east around Ethiopia and Kenya, and in the west around Nigeria and Ghana. Several African countries are currently in lockdown, such as Mauritius, and partially in 5 counties in Kenya, including Nairobi. Restrictions remain in place in most countries in Africa, although the economic lockdowns of this time last year have not been repeated. Pangea Risk rates the most vulnerable countries in Africa through our COVID-19 country risk vulnerability model. This model is fed by data on economic expectations, the country risk outlook, healthcare indicators, and the trajectory of the virus itself. Based on our latest update this month, countries with weak governments such as those in Zimbabwe, Sudan and Somalia remain most exposed to the impact of the virus in terms of their country risk outlook, as well as markets where an economic recovery has been sluggish, like the Republic of Congo and Equatorial Guinea, for example. On the other hand, Africa's small, economically diversified and well-governed states like Benin and Rwanda have built up the strongest resilience to this impact. Our model is freely accessible on our website, and is frequently updated, so please do take a look if you are interested. Our model does not yet incorporate vaccination data inputs, because Africa's vaccination rollout lags the rest of the world. While the steady rollout of mass COVID-19 vaccination campaigns in much of Europe and North Africa have created ample expectations of an impending return to normalcy, the situation remains tenuous in much of sub-Saharan Africa. Most African states have received vaccines late and in limited quantities compared to their counterparties in the global north, resulting in a stark disparity in vaccination rates between Africa and the rest of the world. In this context, it is crucial that vaccine access is improved as rapidly and in as many areas as possible. Apart from the public health necessity, whether a sufficient rate of vaccinations can be achieved across the continent will have considerable bearing on Africa's economic recovery. In particular, the revival of the tourism sector depends on the rapid resumption of international travel, which would be expedited by attaining herd immunity through vaccination. However, vaccination programs continue to face significant obstacles, including an ongoing shortage of vaccine supplies and public vaccine hesitancy. Moreover, the greater the degree to which populations are exposed to COVID-19, the more likely that the extensive circulation of the virus will give rise to new variants, with potential to evade the current batch of vaccines. Now, we at Pangea Risk have of course been focusing on covering the pandemic and its impact on Africa. We have looked at countries such as South Africa and Egypt, building up their own local vaccine production, rather than relying solely on imports. We have covered the laudable efforts of the COVAX initiative to increase vaccine access and accelerate the acquisition of vaccine doses. Vaccine financing initiatives committed by the World Bank, the African Export-Import Bank, and others are likely to offer a substantial boost to COVID-19 vaccination campaigns across Africa. However, progress is likely to continue to be slow and uneven in the coming months. Vaccine hesitancy has also been exacerbated by the widespread proliferation of misinformation. And another source of uncertainty is the presence of a growing number of COVID-19 mutations, which may also undermine vaccination campaigns. 2 of the 4 variants of concern currently in global circulation originated in Africa, namely in South Africa and Tanzania. Uncontrolled spread of these variants will limit Africa's ability to reopen its travel and tourism sectors, which will be essential to drive economic recovery. In 2020, Africa fell into its worst economic recession in 25 years and recorded its worst annual contraction in half a century. It is therefore surprising and somewhat exhilarating, perhaps, that the continent is set for a faster than anticipated economic recovery this year, although the continent will still lag other regions across the world. The African Development Bank now anticipates that Africa will see 3.4% economic growth in 2021. Record demand for metals and other commodities have boosted the prospects of some hard-struck countries such as Zambia and Ghana. Moreover, the coronavirus has put less pressure on Africa's public health systems than initially feared. A case in point is Africa's largest economy, Nigeria, which made a surprise exit from a short 2-quarter recession in 2020. However, such causes for optimism need to be balanced with a fair amount of realism. The main contributor to Africa's economic recovery this year will be South Africa, its most developed market, which suffered a massive 7% economic contraction in 2020, the country's biggest drop in economic output since the Second World War. Unsurprisingly, a sharp recovery in GDP is anticipated for 2021, with figures estimated between 2.5 and 3.5% growth for South Africa. Elsewhere, like in South Africa, Such growth prospects would be determined by governments' abilities to refocus on their coronavirus response and vaccination rollouts, while also implementing much-needed economic reforms. Most African countries will barely recover last year's lost output. Both South Africa and Nigeria will need to wait at least until 2022 to return to pre-pandemic levels. But let's take a closer look at the fastest growing economies in Africa in 2021. With the exception of Botswana and Mauritius, which come from a very low base after record contractions in 2020, this year's fastest growing economies will be in the west and east of Africa, spearheaded by Kenya and Niger. What almost all of these markets have in common are diversified economic bases, sound governance, and strong fiscal and monetary policy making. We have some time, so I'm keen to pick on a few of these countries and look at their success factors in driving their recoveries. Now, Pangaea Risk has issued caution about Kenya's sovereign risk outlook multiple times since 2018. The pandemic has exposed an economy weighed down by rising public debt, standing at $64 billion, with an additional $12 billion in undisbursed loans, years of missed revenue collection targets, and a budget deficit hovering at more than 6% of GDP. Even in the best case scenario, per capita incomes are due to fall and poverty levels will increase between now and the time President Uhuru Kenyatta leaves office in 2022. But earlier this year, Kenya's government seems to have made a drastic U-turn on its fiscal policies that have also been criticized by creditors and the IMF. Despite initial reluctance, Kenya has now successfully applied to the Debt Service Suspension Initiative, the DSSI, and rescheduled a sizable portion of its Chinese debt, while the government has begun to roll back its tax relief measures implemented last year in April for businesses and consumers. Kenya's rebound will be supported by recoveries in key sectors such as education, agriculture, manufacturing, construction, and retail and consumption, as well as the government's recovery plan. Such forecasts are perhaps a little too optimistic, given that tourism, which is an important generator of foreign exchange, will remain depressed for much of this year. However, Kenya's sovereign risk outlook has significantly improved, and growth prospects for 2021 are boosted by the government's legacy-building industrialization agenda. Kenya is unlikely to apply to a new common framework to restructure its commercial and Chinese debt, but the country is seeking the reinstatement of a $1.5 billion IMF standby arrangement that lapsed in 2018. While the economic and sovereign risk outlook for Kenya has noticeably improved in the past couple of months, there remains a critical spoiler in the form of political uncertainty ahead of an upcoming constitutional referendum later this year and the 2022 general elections. Just as in 2002 and 2008, political risk may determine Kenya's economic success. Now, staying in East Africa for now, the launch of the East African Oil Pipeline will herald the start of Uganda's commercial oil development and a large-scale associated infrastructure build-up. Uganda's newly re-elected president claims that investments in the oil sector will amount to $16 billion and will create thousands of jobs. However, the actual benefits of the oil sector will remain in doubt, as operating profits of a new pipeline will be split with Tanzania, while operating oil companies have managed to secure a better deal given the low oil price climate during the pandemic. The pandemic and oil price volatility have done little to offset the progress within the nascent East African oil sector. The East Africa Oil Pipeline will run through neighboring Tanzania and will make a significant impact on both countries' economies, but predominantly over the medium to long term. France's Total signed off this month on the deal, which is expected to see investment of over $10 billion into the wider oil sector by stakeholders of the pipeline that also have stakes in various other hydrocarbon projects in Uganda. Most of these require the pipeline to be operational. Moreover, the formalization of Total's activities in Uganda could see the country attract additional investors into the sector following the largely unsuccessful oil block licensing rounds in 2019 and last year. That said, the full financial boon for the Ugandan government will only be realized in 2024, when oil production is scheduled to commence. By 2025, the oil sector is set to accelerate GDP growth to nearly 10% per year. In the meantime, the country will continue to feel the impact of the pandemic. The weakening economic conditions emanating from the pandemic have put significant pressures on revenue collection, expenditure, foreign reserves, and the exchange rate, creating urgent, large external and fiscal financing needs. Now, on the other side of Africa, another recently elected president, Alassane Ouattara of Côte d'Ivoire, is looking to re-establish his political authority and restore legitimacy to the country's tarnished electoral process following disputed elections this year and last year. The Ivorian government has made some recent successes in curbing the coronavirus pandemic and launching its vaccine program. In February, Côte d'Ivoire took delivery of some 500,000 vaccines, becoming the second country in the world, after neighboring Ghana, to receive coronavirus vaccines from the COVAX initiative, which was created to ensure that lower middle-income countries have fair access. Now, Côte d'Ivoire's economy is set to recover in 2021 from a pandemic and elections-induced slowdown in 2020. The GDP growth rate is expected to rise to 6.2% this year from just 1.8% last year. Yet the short and medium-term outlook remains highly unstable, as global demand for Ivorian exports such as cocoa, metals and oil remains volatile. Just last week, the European Union threatened to ban the importation of Ivorian cocoa in protest over illegal mining in the country. The new Ivorian government will continue its massive infrastructure development program in Abidjan, which is now also being extended to northern impoverished regions. A key focus area will be debt sustainability, as the country's debt burden has increased to 41.7% of GDP this year. As part of this, the new government will need to finalize a $1.5 billion debt reduction development contract with France. Africa's economic recovery this year will be uneven, just like its inequitable vaccine rollout. Some countries like Seychelles will continue to suffer terribly from international travel sanctions, even though the island nation leads in Africa's vaccine rollout. Others, like Angola and Republic of Congo, will see little benefit from higher oil prices due to unaffordable debt and uncompetitive local energy sectors. Insecurity marks places like Chad, where a rebel offensive is ongoing. But the real losers this year are Ethiopia and Zambia, and this is mostly due to political risk. Ethiopia was Africa's and now the world's fastest growing economy for years, but the country's outlook is challenged by war, insurgency, and political uncertainty. Zambia should be boosted by higher copper prices, but the country will remain in default for most of this year and is unlikely to receive a financial bailout until after its elections this year as well. More on these countries shortly. In April 2020, Pangaea Risk downgraded the country risk outlook for all African countries at the start of the pandemic. Since then, we have updated the one-year country risk outlook on a quarterly basis. The latest update, which was carried out at the start of April this year, shows a real improvement in the country risk ratings based on our standard assessments of rating by default highest risk score. We now rate more countries, specifically 21% of Africa's 54 countries, at a moderate risk level, including Botswana, Benin, Togo and Ghana, And we have even rated Rwanda at the low risk rating level for the first time in over a year. But many of Africa's economic performers remain hamstrung by political, security, and sovereign debt risks, such as Sudan, Zambia, Zimbabwe, and Malawi. More than half of Africa's countries continue to be rated at the severe and high risk rating categories, red and orange on this map, including former champions of investment, Ethiopia and Mozambique. So which specific risk indicators should we be watching in 2021? We have already covered the coronavirus trajectory, vaccine rollout, and their economic impact on Africa. Plus, these factors remain mostly outside of Africa's control. Let's delve instead a little deeper into Africa's political and security outlook, as well as its sovereign debt risk. And let's talk about what can be done to help Africa emerge from the pandemic. 2021 is an election year in which many African countries are holding presidential and legislative elections. So far this year, we have seen presidential elections in Niger, Chad, Djibouti, Uganda, Republic of Congo, and Benin. All these votes were disputed and marred by violence and allegations of election manipulation. It is a concerning trend in the coronavirus era that African states can again tamper with elections and repress political freedoms, while the rest of the world is distracted. The pre-pandemic climate of an increasing number of peaceful democratic transitions and orderly elections has been interrupted. This bodes ominously for highly anticipated presidential elections still coming up later this year. I'm specifically thinking of Zambia and South Sudan, as well as the stalled elections process in Somalia. And there are also concerns over legislative elections, particularly those in Ethiopia. Ethiopia's troubles began well before the pandemic, as indicated by the country's foreign exchange shortages that began more than 3 years ago, that spiked initial non-payment risks. The situation was aggravated by a collapse in demand for Ethiopia's exports last year and a war in Tigray in November 2020 that has triggered an ongoing insurgency in the north of the country and upset the regional balance of power in the Horn of Africa. The impact of the various conflicts in Ethiopia is also taking its toll on the country's economic outlook. The IMF currently forecasts just 2% growth in the country, which is higher than its initial 0% growth estimates for this year, but remains one of the slowest economic recoveries in Africa from the pandemic-induced slowdown last year. Meanwhile, the local birr currency continues to depreciate against the US dollar, while inflation remains high. Consumer prices rose by 20% last year, and the rate will undoubtedly remain above 13% in 2021. On a more positive note, gross public debt in Ethiopia has stabilized as a percentage of GDP, while the current account deficit is now due to shrink to 3.6% from more than 11% of GDP 5 years ago. Security-related spending pressures will escalate in the near future amid emerging political and stability risks. This in turn may prompt further deterioration of fiscal and foreign reserve balances. Aside from a nascent insurgency in the Tigray region, other flashpoints include a military buildup near the border with Sudan, ethno-political violence in the Benishangul-Gumuz region, and unrest associated with the upcoming elections in June. The Tigray conflict has also exposed vulnerabilities around Ethiopia's negotiations over the filling schedule of the Grand Ethiopian Renaissance Dam, the country's flagship investment project. Egypt and Sudan feel bolstered in their resistance to the filling of the dam and are seeking to build international consensus in their favor as foreign support for Ethiopia is hampered by allegations of human rights abuses in Tigray and elsewhere. Pangea Risk monitors security risks on a monthly basis, based around elections, ongoing insurgencies, and civil unrest trends. For example, we provided 2 detailed warnings ahead of the 12-day Battle of Palma in northern Mozambique. Specifically, these intelligence warnings were issued 5 months and 12 days before the insurgency's raid commenced on the natural gas industry hub. Currently, we assess that there will be a security vacuum in Cabo Delgado in northern Mozambique in the coming month, if not longer, which leaves both Palma and other locations in the province exposed to further militant attacks. Such further attacks on Palma should also be expected in coming months as the insurgents again seek to hold territory and extend their control northwards from Mocimboa da Praia. The militants who straddle the Rovuma border region will also consider the Tanzanian port town and natural gas hub at Mtwara as another highly aspirational target. Mozambique's economy was already struggling to recover from the pandemic-induced slowdown in 2020. It would have been one of the slowest growing markets in Africa this year. The main concern is that the delay in bringing LNG on stream will further erode the government's revenue targets and also erode its ability to pay off its massive debts, including the already restructured so-called tuna bond. Mozambique has effectively already spent much of the anticipated gas revenue windfall at high interest, and this gas bonanza may now never happen. So we can expect more non-payments, including sovereign default risk, unless the country can rapidly convince multilaterals that it is willing to implement economic reforms and enhance transparency, which seems unlikely. Mozambique is not the only country in Africa with a concerning sovereign debt outlook. 7 African economies now have public debt that is larger than the size of their economy. Africa's debt burden is expected to be 10 to 15% higher after the pandemic. Even another round of IMF emergency financing and G20 debt relief may not avoid further defaults. After accurately forecasting debt defaults in Mozambique and Zambia over the past few years, Pangaea Risk has now raised particular concern over Angola and the Republic of Congo, whose oil-dependent economies may not be able to withstand the economic impact of the pandemic. In order to drive a more sustained and broad-based economic recovery on the continent, an additional $154 billion in financing is required in the immediate term. The IMF projects triple that amount is needed in the 3-year outlook. As long as the group of 20 wealthy countries cannot agree on issuing more special drawing rights at the IMF, the prospect of such financial support being paid out is highly improbable. Another plan proposes that rich countries should pay some of their special drawing right allocations into COVAX to speed up vaccine distribution to the poorest countries. The G20 has also agreed now to extend its debt service suspension initiative until the end of 2021, although this will be the final extension. If all eligible countries participate in the DSSI, this could create almost $10.5 billion in savings. However, the DSSI is unlikely to reach full capacity, as some African countries prefer to avoid the scheme that mandates how savings from debt service relief should be spent. Also, the common framework for debt relief that was started at the end of last year is still being shunned by most debt-distressed countries, with the notable exceptions of Chad and indeed Ethiopia. Countries that have issued Eurobonds are reluctant to apply to the framework, fearing that doing so will impact their sovereign ratings. Indeed, distressed emerging markets will seek to issue more bonds on international debt markets to fund their budgets and repay existing loans. Ghana, Kenya, Ivory Coast and others will issue more Eurobonds over the course of this year, despite growing concerns over repayment affordability. Africa still has a long way to go before it can begin to emerge from the pandemic. Some factors, such as inequitable vaccine distribution and debt relief offerings, are not within Africa's control and will extend Africa's vulnerability to the pandemic well into next year. However, Africa can and should be making stronger progress on implementing economic reforms, assuring political stability, and mitigating these security risks to seek new foreign direct investment. The ongoing events in Mozambique and Ethiopia should therefore be a warning to other African countries that are seeking to emerge from the pandemic. As usual, if you would like to receive a copy of my presentation, or if you have any questions, or if you would like to receive more information on Pangaea Risk, on what we do, and our Africa and Middle East forecasts, please do send us an email at insight@pangaearisk.com. I would like to thank you very much for your attention and interest, and I wish you a pleasant remainder of the conference. Thank you.